Chart of the Week with Redmayne Bentley.
You're listening to financialradio.co.uk. My name's Giles McMullen, chatting to Bill Rook from Redmayne Bentley. This is Chart of the Week. Bill, we're going to have a look at the housing market this week. The first chart we're going to be having a look at is the housing.png chart that you've sent to me. What is this? What does this tell us?
Well, this is an HBOS, and it's the housing monthly non-seasonally adjusted chart, and it shows that sort of tracking period between 89 and 98. Housing market was more or less sideways. Well, I've compared this to the performance of the 350, and above that I've got interest rates at the top, showing that obviously with the high interest rates kicked in 1989 onwards, we had the sort of basically stagnation of the market. And that even prevailed when the interest rates dropped down to 5% back in '93. It only took off in '98, and you saw that sort of monumentous rise, almost 3 times rise from '99 onwards. So, and from that period, actually, against the 350 started tailing off a bit. It only caught up latterly, and both are now in sync on the slippery slope a bit.
So what's it looking like now, Bill?
Well, I think it's going to come back to the support line, which is around the 530 level, which would make about an 18% drop from the housing market. I know it's another 7% drop to go, I think on the housing market from this chart. That's if we don't fall further, and if we do fall further to the longer-term support line, which is that line which is sort of roughly going from 96 onwards. It's not quite as accurate as I'd like it to be, but it's a monthly chart, this, and it's sort of it shows the longer-term trend coming in around the 450 level. So looking for 200 points off the high if it gets down to that sort of level as it's going along. So it's about a third off, is it? I suppose the worst-case scenario. I suppose halfway between the two is sort of halfway house. I was going to say it's about 25% off.
So you're looking at a best case scenario of down 18% and a worst case scenario of down around about 30-35%, something like that. Yeah,
but that means sort of, I mean, that sort of interest rates sort of fairly stable at the moment. The sort of interest rates are stable at the moment. They have been for a while, and the authorities have got their hands tied with the energy prices increasing, and unfortunately inflation through the system. Whether they can cut rates or not, only time will tell. But yeah, it does look a bit soggy, and I think with that we're going to see the market, certainly the 250, struggle a bit, but it's recovering from, at the moment, that particular market is recovering from being heavily oversold. I think things were much worse than things were, and there's some recovery at the moment. Only time will tell as to whether this will actually work its way through to another slippage or a start of recovery.
Okay, Bill, now moving on to the next one you want to look at, which is ITB. Now, this is an iShare for a housing index. Just tell us a little bit about it.
This is based on the US market, and namely the S&P. This is a home ETF, basically looking at all the home builders within the S&P. Now, I wish we had something like that in here, on this market here, then we wouldn't have to have just the exposure to Barrett's or Persimmon or one of the other boat builders, when we can actually have an ETF gives you the full range of what's going on, the full trend. In case one of them defaults, you might have something left in the other. So this chart here is certainly showing some recovery here. I'm very encouraged by this chart. But again, it's a reversal. And what I've got above the chart here is a weekly MACD, and the weekly MACD, you can see the indicator on the right-hand side. It's not as low as it is on the left, and yet it's been hitting lows, which means divergence. I haven't put lines on there to show that. I'm just telling you that this is a divergence chart, suggesting there's a strong chance of recovery like there was on the markets we've seen recently. The divergence suggests that the indicator is not following the markets down, and that there's a chance of recovery, and we're looking towards at least a $17 move, maybe a bit more on this, as the market moves along. The volume levels aren't as high as they have been, I suppose, but it seems to be heading towards that, moving towards a range, back to the range of about the 20 level, perhaps, in time. But again, this is an oversold situation, which I was talking about earlier, and sometimes you can't really discern whether there's a new trend from this one or whether there's just a knee-jerk reaction for the market. So it's harder to work out, but it's a traders off market at the moment on this thing,
Okay.
and it's certainly looking for recovery.
Okay, Bill. Now the next one you want to look at is another housing sector index. It's the one that's labelled PH. Tell us what this is.
This is the Philadelphia Index. It's the broader sort of Philadelphia Index. It's sort of it's another measure of house building or house strength in the market. And the line at the 100 level is the level where it were hit in 2003. And this Philadelphia Index is actually showing some more strength now, bouncing off this. Again, you can see there's divergence. If you look at the MACD above the charts there, you can see that there's the MACD isn't as low, MACD weekly isn't as low as the low point on the market, and this again suggests there's a rally. So again, suggesting a confirmation that things are going up, picking up. The weekly inverse Fisher transform with the RSI, which is the orange box in the middle there, suggests it's very, very early to go into this. And the red line across the middle of the chart, the sell signal, that's where the MACD weekly went negative. Clearly it hasn't gone positive yet, so it is a speculative rally, but one which should indicate that it's possibly oversold, and trying to find sort of a level at the 150 level, I would suggest, before we find out where it's going to go.
Okay, Bill, thank you for that. And finally, the S&P Case-Shiller. What does this tell you?
It's miserable. Market has come off a long way already, this market in the US. What have I done? The US market shot up. Well, this is against the UK market. The middle, what I've got here, the UK, I've got the S&P Case-Shiller at the bottom, the 10-city composite. I mean, it's a vast market in America, as you know. So, but this is the 10 cities. There's a 20-city, but it's short, the data is shorter, and it's not, and you don't get such a picture of what's going on. The 10-city one does give you at least a trend. It's very similar to our trend when it took off in '98, and it actually shot up much faster. In 2005-6, you can see where those vertical lines are coming through here. You can see from the comparative chart that the US market was 30% greater than our market. It's outperformed by 30%. So, and you can see our market at the top there is very much that's the monthly non-seasonally adjusted data. The incline was much less faster than the American market. The American market's come right back off now, and is more or less running at parity with the UK market now. So they're sort of, in terms of falls and everything, they're at a parity. So it's a wait and see again. It's certainly, well, is a trend falling back. It looks, I suppose, to be sort of like a less steep fall on the American market, and these figures are the latest figures I've got. So it won't include for us the last few months, because I think they came through in April or so. But we've got to wait for that data to come through. But certainly the trend below its longer-term moving averages on both housing charts there suggests further weakness. But the trend may be less steep. Maybe the falls have already come off a lot already there. But the trends are certainly down, and a little worrisome, I think, there.
I suppose, in summary, Bill, the housing market's still looking grim, but maybe some spots of light and hope there for investors. Bill Rook from Redmayne Bentley, thank you very much for joining us today. If you have any questions for Bill, then you can post them in our forum on financialradio.co.uk. Just go to the site, financialradio.co.uk, click on the forum tab, and follow the instructions there to put your questions to Bill. Bill Rook from Redmayne Bentley, thank you very much for sharing your opinion with us today.
Chart of the Week with Redmayne Bentley.